Hello traders and welcome back to the Forex Geek where we dive deep into the tools that can help you make smarter trading decisions. In today's video we are going to be talking about the MACD day trading strategy, which is a proven method to identify market momentum and spot profitable trade setups with precision. So if you've ever struggled with timing your entries or exits, this strategy could be a game changer for you. And you should stay with me until the end of this video as I'll walk you through exactly how the MACD works and show you a step-by-step approach to using it effectively in your day trading. So without wasting any much of your time, let's get started. Just going to add the MACD indicator to our charts. Now the MACD is a trend following momentum indicator that helps traders identify the strength, direction and potential reversals of a price trend. It was developed by Gerald Appel in the 1970s. It is widely used across markets including Forex, stocks, commodities, indices, and all of that. The key components of the MACD includes the MACD line, the signal line, and the histogram. Now, this is the MACD indicator here on the chart, and we have the MACD line, which is the blue line. As you can see, the MACD line is the blue line, and this is calculated by subtracting the 26 period exponential moving average from the 12 period EMA. It represents the difference between short-term and long-term momentum. Now, after the MACD line, we have the signal line, which is the orange line. Now, the orange line is a 9-period EMA of the MACD line. It acts as a trigger for buy or sell signals when the MACD line crosses it. And also, we have the histogram. The histogram is just the difference between the MACD line and signal line, and the histogram usually shows momentum strength. Positive bars, which are the green bars, of course, they indicate bullish momentum, while negative bars suggest bearish momentum. And that's just it for the MACD. So how does it work? How can we use this to identify signals? Basically, when the MACD line is above the signal line and both are above zero, it indicates bullish momentum. We have that signal happen right here. The MACD line, which is the blue line, is above the signal line. Remember, the MACD line is the blue line, the signal line is the orange line. Both of them are above zero. It signals bullish momentum, and we should be looking to enter buy trades. When the MACD line is below the signal line and both are below zero, it signals bearish momentum, and we should just be looking to sell. We should be looking for opportunities to short the market. It just indicates that the trend is strong enough. When it's above zero, it indicates the trend is strong enough. The bullish trend can start when we have the crossover. It could be below or on top of it, but it's usually the crossover usually happens below for a bullish example, and for a bearish example, the crossover usually happens above, as you can see here. But it is advised that you wait till both lines are above zero for a stronger trend and for a more probable trade in which you won't have to take false signals. So let's talk about our day trading strategy, which is why we are here today. The first step is to set up your charts, just like I have done. Start by setting up charts on the. You can set it on. We are talking about day trading, so you should set it on the like 1 hour or the 15 minutes. I'll choose the 1 hour, or I can just go down to 15 minutes. 15 minutes is okay for day trading. Now, after this, the next step is to add the MACD indicator with its default settings. I've showed you the default settings already. These are the default settings: 12, 26, 9, and everything should be EMAs. This will help to track short-term trends, and the moving averages will help confirm the direction of momentum. Then the next step is to identify trade entries. I've already explained the signals, how you can spot the signals on your chart. The next step is to identify trade entry. Remember, we are day trading, and we want to be able to filter false signals as much as possible. So to enter a trade, wait for clear signals of momentum. For a long trade, ensure that the we are bullish. I would advise you add a separate moving average, like like a 9-period moving average, to confirm the general trend before you look at your MACD. This will help us identify the overall trend of the market. We are currently using a 9-period EMA to tell the trend, And after confirming this trend, you should wait for the MACD line to be above the signal line, and both of them should be above the zero line. You see that cross happening here. You can see the bullish histogram, the positive histogram bars, and you can also see that we are above this moving average. So it means that we should be looking for opportunities to buy as price has respected all our criteria. So we should just enter a buy signal, a buy setup. Once we have seen our criteria form, I would advise you enter a buy setup after your break of structure or market structure shift to the upside, as you have happening right there. Or you could wait for where we have slight pullback and a break of market structure shift to the upside before you just jump in. Don't just jump in when you see your criteria is met. You jump in when price action also aligns. Yes, and you can see this small engulfing candlestick, bullish engulfing candlestick bars. See that indecision candle there, also showing that buyers are stepping in and sellers have no clue what's happening. We already have the MACD confirming us, so we just look to just place a buy entry from any of all of these examples I've given, where you can use to enter. You could enter here, or you could enter at this bullish engulfing, that indecision candle, or you could enter at this further breaks. Stop loss below this swing low, and I like to enter at the bullish candle, indecision candle, and take profits at, I would like to target, remember we are day trading, so we like to be out of the trade within the day. So I like to target 1:2 or a 1:3, and also I can target previous resistance levels like this one. Yeah, but that would mean lower risk reward ratio. So I just like to just target fixed risk reward ratio of 1:2, and I'm out for the day. Yeah, that's how I do it. And also we have the next day, we can have another trade. You can see that both here we have the MACD line being above the signal line. We have that crossover happening here. We have a bullish histogram. We also have price being above our 9 period EMA. So many criteria being met at the same time. We have the pullbacks and a minor market structure shift, break of structure to the upside. So we really need to take our entries here. Our stop loss below the moving average, and take profit at 1:2 or 1:3 for this trade. And that's it, out that same day. This is day trading we are talking about, remember. This is the MACD day trading, and this is how I usually day trade using the MACD. Now let me look for a bearish setup, a bearish example. And now we can see a bearish example happening here. The MACD line is below the signal line, and both of them are below zero, and we can see our bearish histogram bars there, and at the same time we can also see price going below the moving average, confirming that we are now bearish. We have our bearish engulfing candlestick, so we just like to enter a sell trade at the open of the next candle, and stop loss above that high, and I'll take profits at 1:2. Remember, 1:2, 1:3. The MACD moving averages are generally below the zero line, so we are bearish. I could just look to trail our stop loss, but we are day trading, so I like to be out that same day, in and out, in and out. And this is a 1:2 risk to reward ratio for this sell setup. That is how you can use the MACD day trading strategy. So I would advise you pay attention to divergences between price and MACD. This is also very important, as it can help you know whether we are actually bullish or whether the market is about to have a reversal on the way. And alright traders, we've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.